Hello everyone, today is Friday, January 1st, 2021. Happy New Year to you. Kicking off the first video of the new year. Actually, I want to take a second here to just thank you for tuning in and watching this video, and for all our loyal sort of viewers here that have been watching for a long time. I often get emails or in the comments, people leave some great comments, and I do appreciate it. I'm glad that these videos are helpful. I hope that they're helpful. We try and tour the markets as best we can, be as objective as possible, show sort of both sides of the coin, and hopefully with that we can all make better, smarter, wiser investing decisions. That's certainly the goal. And again, I just want to thank you and everyone for a fantastic 2020. And I wish everyone the best sort of going forward. Now, if this is your first time catching this video, then welcome. We break our analysis up into two parts every single week. So we review everything that went on in markets, from performance, market internals, volatility in sectors, and everything in between, and sort of point out everything that stands out. And then in part two, we jump into the charts. We put everything from part one into context, look at those longer term trends, try and make sense of everything, and look for those opportunities ahead. So hopefully that sounds good. Let's dive into our New Year's edition market analysis. We'll be a little bit short this week. I'm going to kind of move through pretty quick. I wanted to, usually we pull out a few headlines here of just the big things that happened. And because it's the new year, I wanted to sort of point out the performance and the drawdown from this year. And I think this is important because I know a lot of people, I think, are focusing kind of just where we ended up for 2020, And it was a great year, right? At the end, we got there with some very strong double-digit performance here by the major indices. You can see the S&P was up 16%, Nasdaq up 47%, Russell 2000, all that fourth quarter run up 18%. So those are some great, strong numbers. If you held the index, you certainly made out. But here's what you had to endure to sort of capture those returns, right? Because those drawdowns were significant. They were big, they were scary, they happened very fast in the first quarter, and it was a scary, uncertain time, right? So we had 35% drawdown in the S&P, Nasdaq was 29%, Russell 2000 was almost 44% drawdown. So you had to tolerate that, you had to endure it, and you had to not panic, you had to not sell, and you had to just not make a lot of decisions that frankly were easy to make, to just get out of the market. And then it was tough to catch that V-shaped recovery. So that's kind of what went on there. And again, I think the drawdowns are interesting and the volatility is interesting. It tells the more complete story. It wasn't just a great double-digit return year and it was easy, just easy trend all year. It was pretty difficult at the beginning. So I thought that was interesting to sort of just point out. If we jump into sort of our usual market performance numbers here, you can see final week of the year, strong for the market. Russell 2000, clearly the standout loser, down 1.45%. Everything else was basically up 1.5%. So that was interesting there to see the Russell 2000 taking a breather and kind of heading south while everything else continued to trend higher. Market internals here, I am capturing a little bit of last week because of the holiday. But you can see number of stocks hitting 52-week highs, 700, very strong number there. Again, technically we got Friday's number in there, but still a lot more stocks hitting new highs than there are hitting new lows. Cumulative AD line also strong. Percentage of stocks over 20 SMA sitting about almost 70%. So that's a pretty strong number. If we look at the cumulative NYSE 52-week highs minus lows just over the past 30 days, you can see that this trend continues to be very, very strong, just grinding higher here. You could argue it's slowing down just a little bit, but if we want to split hairs here, we can sort of point that out. But largely speaking here, this trend, this current is still going in the right direction if you are bullish on this market. Sector performance, almost everyone was green here this week. Utilities were at the top of the list. That was sort of the most beaten up for most of kind of the fourth quarter, frankly, and they came back 2.43%, followed by communication services and financials, which are continuing to see a strong move to the upside. On the downside, energy, tech, industrials, those were your bottom three. Only energy was in the red. If we go to volatility, You can see this week we did get the VIX up just a little bit here. Not much of a change, but 22.75 is how the VIX closed out. A little bit up from last week's 21.53 reading. Otherwise, term structure here looks pretty kind of ordinary for what we've been in. Interest rates, so yields were down just slightly here throughout this week. We saw credit markets continue to rise. Nothing really interesting on this slide one way or the other. Dollar and commodities, dollar getting smoked again. So I think this was new lows this week. I don't know if we settled right at the lows, but dollar basically kind of rolling back over. And everything else on this chart basically rejoices. Gold, silver benefiting. Bitcoin continues to benefit, up 11%. Ag ETF up almost 2%. Just natural gas here kind of doing its own thing, which quite often it does, but basically everything kind of liking that down dollar. So when we put it all in a report card here, it was pretty strong marks across the board. It was a B. We had the sectors not really kind of in line with perhaps ideal. So with utilities at the top and some of those other risk sectors we would expect to be at the top, not really doing their leadership role. So we get a B for the final week of the year. Lastly, if we look at our two trading systems, how we're personally sort of positioned here in the market, at the top we've got Merlin, which is continuing to just enjoy this big run up. It's basically fully invested, 41 positions. It's just locking in gains. It's trailing stops, and it's putting on new positions. So that's essentially what it's doing there. And you can see Lamerick, our bottom system, is much more tactical. It's a little more, wary of sort of the action. It's looking at how stretched some things are, and it's kind of just sitting in the middle. It's 8% invested. So there's 3 positions on. I think we got 2 longs, 1 short. So it's kind of just staying very tactical, and it's, good counterbalance to Merlin's, kind of all-in mode that it's currently seeing. So that's it. That's how we're positioned. Let's jump into the charts here in just 1 second. All right, we are back. We've got TC2000 open. We've got our equity market grid showing right now, and we have price itself as the white dashed lines on all of these charts. We have our custom smart trend filter indicator for TC2000, which are the multicolored dots that measure trend and trend strength. And this is a weekly time frame. So we're going to probably move through this pretty quick on the second part for this week. It was a short week. Markets closed Friday. Volume kind of slowing down, and not a whole lot of change in terms of general market direction. So I do want to actually sort of make a correction. I made a correction in the comments, and we actually had a power user, so to speak, of our indicator and watching our videos kind of point this out in last week's video. But we did identify the fact that the S&P 500 went neutral here on the weekly time frame. It's actually a bit of a mistake, essentially. It's the way TC2000 has been tracking or pulling in volume data on the index. So if we put this to the S&P 500, for instance, you can see this, or the SPY ETF, I should say, you can see this is still green, price is still well above it. So this was actually sort of a faulty signal, if you will, the fact that this is yellow right now, and hopefully that'll sort of correct itself soon. So really, when we look at this chart here on a weekly time frame, we essentially have just bullish readings across the board, and that, basically should make sense. Stocks are essentially only going higher here. That's been the case all fourth quarter, and so all these longer term trends are very much intact. They certainly might be extended, right? They might be overbought, they might be a little frothy, but that doesn't speak to the trend. The trend is just up. So that's all that this is telling us. If we go down to a daily chart of these indicators, let's just switch the S&P to the SPY right now. You can see here on the daily chart, everything is also still bullish, green, healthy. The Russell 2000, bottom left here, this is the most, potential under pressure here, the closest to the smart trend filter that we have. This has been in just a smooth uptrend though for so long. I mean, this has so been uninterrupted, just grinding higher. So the fact that it's trying to, it's finally starting to kind of pull back a little bit is just well overdue, and just quite frankly to be expected sooner or later. So that's the case. But for now, it's still bullish, and so is everything else. So let's go to the charts and candlestick analysis here, and let's look at things a little bit closer. A lot of lines on this chart, but this is kind of what we've been looking at here. with the S&P 500, the roadmap. Essentially, we drew this channel that we've been in here for the S&P 500 for the past, call it 2 months, since the start of November, or I guess mid-November, is when we kind of got up in this channel here. We had this brief kind of undercut here on this little day back on the 21st of December, but prices held, markets held into the support level. We bounced, and we've kind of just been grinding higher on the lower end, the lower rail of this channel. We've got a bunch of horizontal support underneath that we can look at, and that's kind of the roadmap here. So we are, in this uptrend channel. We are holding up. We are holding over 3,700. If we started to break, and there's, again, I always like to use crayons when I'm drawing my trend lines or horizontal levels. If we start taking out, let's say if we start filling in this gap here between 37.20 and 37.10, right? This little 10-point range here, that's kind of the lower end. That's the immediate support, right? So if we started to roll over, break below that, violate that, then we can get a little more we can get a little more defensive perhaps, or we have a little more technical damage to think of. But until and if that happens, trends are up. Markets trading at all-time highs. S&P is closing at all-time highs. Life is good. Continues to, kind of grind here, and we haven't seen any major pullbacks. Eventually it's going to happen, but we don't see any, major signs just yet. We got some MACD divergence going on, but again, that's not really a reason in itself to be aggressively short. If we look at the Russell 2000, we had some notable underperformance this week. Still didn't really break or violate or cause a bunch of technical damage. We're still holding up. We're still grinding higher here. We're a little bit off of highs. If this starts losing, I'd call it 191 or so, then you have a little more perhaps concern there. That would be an approximate 4.5% pullback off of the highs. So still very minor in the grand scheme of things. But, that's a level we could pay attention to, is in that 191 area, essentially the lows here from Monday the 21st. If we finalize it here with the Qs going out, trading at all-time highs, closing at all-time highs. You can see this has been sort of grinding higher here. It's been putting in all these little consolidations and then just kind of pushing higher through them, resolving them to the upside. So we're stair-stepping higher. The Qs closing at highs. If we start losing maybe this past week's range, 311, if you want to keep things very tight, that's only 2 points from where we are. If we start closing below 311, 312, maybe you got some short-term sell signal there. Otherwise, kind of bigger level down around 303 or so is what I'd be paying attention to. So that's it. That's kind of the same old, right? There's not a whole lot of new information here. Markets are basically grinding higher. We can continue to stair step up our support levels or levels that we want to see the market continue to hold. And that's basically the way we can approach it. So that's the major markets. If we switch over to our other screen here. So if we're looking at, let's just go down to a daily chart. If we're looking at TLT, this is trying to push to the upside here. So we haven't got a buy signal yet for TLT, but I imagine it's going to happen next week, especially if we continue to hold up or see further strength. So keep an eye on that. I do want to talk about TLT in just a little bit. I also want to talk about metals. So if we look here on the weekly time frame for gold and silver, for instance, both of those just went neutral, or at least gold went neutral this week. It wasn't a sell signal. It went neutral. Silver went neutral the past few weeks. On the daily chart for all of these, we've got buy signals, right? So gold went bullish on the 16th. Price is continuing to move higher. Silver went bullish on the daily chart on the 16th. Prices continued to move higher. So I do think that's interesting. And in fact, let's just jump to it now. We'll keep this video a little bit short. I do want to talk gold here. From a price action perspective, it's funny, lo and behold, we identified this way back in the day when this first happened, this little island bottom here. Of course, island bottoms can be pretty powerful patterns. You never know if they are going to lead to the real bottom, and so far in gold it has been, right? So we essentially, you know, left this in the dust here right at the end of November, and we haven't looked back since. So when we look here at gold from a price action perspective, you can see it's coming right back into this big old comfortable range that it was kind of trading in. The top end of this range was support in August. We traded through it in October, and now we're kind of coming right back into it, comfortably trading. So I would expect, you know, a little bit of you know, difficulty escaping this range, but it's in the bull's court right now. You can see on the daily time frame, the trend is obviously up. Like on the weekly time frame, when we looked at our smart trend filter, it hadn't quite turned up just yet. But if we can punch through 180, if we start getting weekly closes over 180, then gold suddenly looks to be in a pretty powerful situation to you know, continue this trend to the upside and maybe even challenge those prior highs. Hasn't happened yet, but if we can start, you know, really pushing through 180 or so, I'd say that's a pretty good confirmation signal there for GLD. If we look at silver, this one here is certainly looking a bit better. You can notice here the fact that it is now actually trying to get over this big range it was in through October, November, December. It's closing above it. There was this consolidation that took place throughout July and August up here that it's starting to work itself into. But from a perspective on, especially even a weekly time frame, silver is much more in charge here, much more in, you know, looking like it wants to already get back up and retest potentially those August highs. So good trends there in motion. Silver looks a little bit better, and we'll just see if they can continue to hold up. If they start to lose, you know, 2350, if they start to lose, you know, these recent slopes in which they've been rising, then, you know, you gotta take a little bit of a pause in both of those markets. So gold and silver, that's one I wanted to mention. TLT, so we've been talking about TLT quite a bit here. You can see this is the range. We've been talking about this 155 level. It was June support. It was roughly March support, although it did certainly knife through there on that 2-day event. But this is where markets have been consolidating and essentially compressing into, and looks like we're starting to try and challenge these highs here. So TLT, let's be on watch into the first weeks of January here. If it starts moving over 159 into the 160s, I think that's your bullish breakout there. If we start nosediving below 155, that's your warning sign. That's your you know, look out below sign. We'll see, you know, how all of that progresses. We'll continue to monitor it day by day, but it does look like bulls are trying to take that stab to the upside. If we go to some sectors here, XLU is just the only thing I wanted to point out. XLU has been kind of the dog here because throughout the fourth quarter, everything else has been working. Utilities kind of left behind, and it had its, you know, it was the best performing sector this week. So XLU, interesting, kind of getting back over 6150. So I would pay attention to that. I know it's not a super exciting sector, but starting to shape back up and see a little bit of you know, interest. And last but not least, I just want to mention again, industrial ETF XLI. So this one here just really tight, and that's really what we're looking at. Volume has dried up over this past month. It's been a very low volume consolidation. It's gone absolutely nowhere for the entire month of December, trading basically totally sideways. It's trading just under its all-time highs. So I think you got a good kind of breakout candidate here to watch either direction, right? Whether it's going to be up or down. I think the levels are pretty clear. So it's something I wanted to mention. That's it. That's all I got for this week. So again, Happy New Year to everyone. Thanks as always for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.